In a stunning turn of events, the Philippines has secured a landmark investment, snatching victory from the grasp of a formidable competitor, China. This unexpected triumph has caught the attention of global analysts. This billion-dollar deal, a potential game-changer for the Philippine economy, has sent ripples across the geopolitical landscape, signaling a shift in the balance of power in Southeast Asia. The implications of this deal extend far beyond mere economics. How did the Philippines, a nation often overshadowed by its economic giant neighbor, manage to pull off this remarkable feat? The answer lies in a shrewd blend of strategic maneuvering, economic foresight, and a keen understanding of the geopolitical chessboard, economic incentives, and a proactive approach to attracting foreign investments. The Philippines has demonstrated a remarkable ability to navigate complex international waters. This victory is not just about financial gain. It's about the Philippines asserting itself on the world stage, showcasing its potential as a rising economic power, demonstrating its growing economic attractiveness and strategic importance. The country's ability to secure such a significant investment highlights its strategic importance in the region. This essay will delve into the details of this high-stakes game, examining the intricate strategies and decisions that led to this outcome, exploring the factors that tipped the scales in favor of the Philippines. We will look at the broader implications for international relations. We'll examine the investment itself, breaking down the financial details and the expected benefits for the Philippine economy, the strategies employed by the Philippines, including their negotiation tactics and long-term economic strategies, and the potential ramifications for both nations and the wider region. This is a story of strategic brilliance and economic foresight, showcasing the Philippines' rise on the global stage. The investment at the heart of this geopolitical drama centers on a sector crucial for the Philippines' continued growth infrastructure. The archipelago nation, known for its stunning natural beauty and vibrant culture, has long grappled with the challenge of improving its infrastructure to unlock its full economic potential. The billion-dollar investment promises to address this critical need with plans to develop modern and efficient transportation networks, upgrade existing ports, and potentially even venture into renewable energy projects. For China, securing this investment would have been a significant victory, further solidifying its influence in the region through its ambitious Belt and Road Initiative. China had reportedly been in talks to pour a substantial sum, estimated to be in the hundreds of millions, into similar infrastructure projects in the Philippines. This loss represents a significant setback for China's ambitions in the region. The Philippines' success in securing this investment can be attributed to a three-pronged approach: proactive government engagement, enticing economic incentives, and the strategic leveraging of geopolitical realities. This multifaceted strategy has been meticulously crafted to ensure that the Philippines stands out as a prime destination for foreign investment. The administration of President Ferdinand Marcos Jr. played a pivotal role, actively courting the investor through high-level meetings and diplomatic overtures. These efforts were not just about securing a deal, but about building long-term relationships. They presented a compelling case for the Philippines, highlighting the nation's young and growing workforce, which is not only skilled, but also adaptable to various industries. Its strategic location at the crossroads of key shipping lanes further enhances its appeal, making it a vital hub for trade and commerce in the region. Additionally, the government's commitment to creating a business-friendly environment has been evident through various reforms and initiatives aimed at easing the process of doing business. Beyond diplomatic efforts, the Philippines sweetened the deal with a series of attractive economic incentives. These included tax breaks, streamlined bureaucratic procedures, and guarantees of transparency in the tendering and execution of projects. Such measures have made the Philippines a more enticing prospect for the investor, ensuring a smooth and efficient investment process. Furthermore, the government emphasized the use of local labor and resources, which not only boosts the local economy but also ensures that the investment has a lasting positive impact on the community, ensuring that the benefits of the investment would be deeply felt within the Philippine economy. This holistic approach has positioned the Philippines as a beacon of opportunity in Southeast Asia. While China undoubtedly presented its own set of advantages, including its vast experience with large-scale infrastructure projects and its ability to mobilize significant financial resources quickly, the Philippines' offer ultimately proved more enticing. The Philippines' commitment to transparency and its willingness to provide a level playing field for all bidders resonated strongly with the investor. Moreover, the investor likely factored in the geopolitical risks associated with aligning too closely with China in a region where territorial disputes and maritime tensions remain a concern. The Philippines, with its strong democratic traditions and its web of alliances with Western powers, offered a perceived sense of stability and predictability that China, despite its economic might, could not match. Section 5, China's response, echoes of discontent and regional ramifications. China's reaction to losing this billion-dollar investment has been a mixture of restrained frustration and veiled warnings. State-controlled media outlets have downplayed the significance of the deal, while simultaneously hinting at potential economic consequences for the Philippines. This setback is undoubtedly a blow to China's ambitions to expand its economic and political influence in Southeast Asia through its Belt and Road Initiative. The Philippines' successful maneuvering demonstrates that smaller nations are becoming more adept at navigating the complexities of great power competition, leveraging their unique strengths and strategic partnerships to secure their interests. Section 6, an economic windfall, growth, jobs, and a brighter future. For the Philippines, this billion-dollar investment represents far more than a line item on a balance sheet. It's a potential game-changer for the nation's economic trajectory. The influx of capital is projected to create thousands of much-needed jobs, particularly in the construction and related service sectors. Beyond the immediate impact on employment, the investment is expected to have a ripple effect throughout the Philippine economy. Improved infrastructure will facilitate trade, reduce transportation costs, and enhance the nation's overall competitiveness. This, in turn, could attract further foreign investment, creating a virtuous cycle of growth and development. Section 7, navigating the future, charting a course for continued success. While securing this investment is a major victory, the Philippines cannot afford to rest on its laurels. To capitalize on this momentum and attract further investment, the government must remain committed to its reform agenda, continuously improving the ease of doing business, strengthening institutions, and ensuring a stable and predictable policy environment. Furthermore, the Philippines must strike a delicate balance in its relations with both China and the United States. While leveraging its strategic partnerships is crucial, it must also avoid becoming overly reliant on any one power, maintaining its strategic autonomy and pursuing its own national interests. Section 8, the global chessboard. A new player emerges. The Philippines' success in securing this investment reverberates beyond its borders, signaling a shift in the geopolitical landscape of Southeast Asia. It underscores the growing economic clout of the region and the increasing sophistication with which smaller nations are navigating the complexities of great power competition. The Philippines' story serves as a reminder that in the 21st century, economic power is a potent force capable of reshaping alliances and influencing the balance of power. As the global economy becomes increasingly interconnected, nations that can offer a compelling value proposition, coupled with strategic acumen and a commitment to good governance, are likely to find themselves courted by investors and positioned for success. Section 9, a new dawn for the Philippines. The billion-dollar question now is whether this investment marks the beginning of a new era for the Philippines, one in which it emerges as a major player on the global stage, attracting significant foreign investment and driving economic growth. With new infrastructure projects sprouting up and economic indicators showing positive trends, the optimism is palpable. The answer, as with most things in geopolitics, is complex and contingent on a multitude of factors. These include political stability, regional dynamics, and the ability to sustain growth amidst global uncertainties. However, One thing is clear, the Philippines has announced its arrival, demonstrating its ability to compete and succeed in the global arena. Major projects and successful business ventures are testament to this newfound confidence. Only time will tell if this is a fleeting moment in the sun or the dawn of a new era of prosperity. What do you think? Will the Philippines be able to sustain this momentum and continue its upward trajectory? Can the Philippines maintain this momentum and secure its place as a leading investment destination? The stakes are high and the world is watching closely. Share your thoughts in the comments below. Your insights and opinions are valuable to us. Don't forget to subscribe for more insightful analyses of the changing geopolitical landscape.